Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GDS-SW, latest report. GDS Holdings Limited offers a range of businesses and services, including co-location services, critical facilities space, customer available power, racks and cooling managed hosting services, plus business continuity and disaster recovery, plus network management, plus data storage plus system security, plus operating system, plus database plus server middleware services, managed cloud services, consulting services. These services cater to various clients such as cloud service providers, large internet companies, financial institutions, telecommunications carriers, IT service providers, domestic private sector corporations, and multinational corporations. The stock price of GDS Holdings Limited has skyrocketed by over 76% in the past year due to several significant events and trends. Strong financial results, particularly in its second quarter earnings, have been a major driver. The company's data center ramp-up and business growth have also contributed to increased net revenue. International expansion and new customer orders have further boosted investor confidence. The launch of GDS-SW has facilitated near self-funding growth and unlocked value for shareholders. Additionally, the easing of chip constraints has improved the company's position in China's AI infrastructure market. The increasing demand for AI-driven data centers has led to aggressive capacity expansion, with new customer commitments reaching substantial levels. Overall, GDS Holdings' strong financial performance, strategic international expansion, and successful launch of its CRAT have all contributed to its stock price surge. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary provided. Revenue growth drivers. Net revenue increased by 10.2% year-over-year, YOY, driven by a combination of factors including continued ramp-up of data centers, accelerating demand from AI, and lower cash operating costs. The expansion of data center services to primary economic hubs has also contributed to revenue growth. Revenue decline driver. Churn and deconsolidation of underlying projects for the CRAT transaction led to a significant decline in net revenue, resulting in a minus 28.5% year-over-year decrease. Net income and profit margins. A shift towards growth. The company's financial performance has undergone significant changes, with net income transforming from a loss to a substantial profit. Net income increased by RMB 959.7 million year-over-year, shifting from a net loss of RMB 231.1 million to a profit of RMB 728.6 million. This remarkable turnaround can be attributed to revenue growth and operational improvements. Profit margins have also seen an upward trend, with gross profit margin increasing from 21.3% to 34.98%. The adjusted EBITDA margin has risen to 46.5%, indicating improved efficiency in operations. These changes suggest that the company's efforts to enhance its financial performance are yielding positive results. The company's financial performance indicates a consistent generation of positive operating cash flow. For the 9 months ending September 30, 2025, the company reported an operating cash inflow of $1,422,122 and $1,381,697 respectively. This trend suggests that the company is effectively managing its operations to produce a steady stream of cash, positioning it for long-term financial stability. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, the total debt has increased from RMB 49,979,995 to RMB 51,825,704, a rise of approximately 4%. Additionally, the debt level in US dollars also saw an increase from $6,537,584 to $8,507,786. These increases suggest that the company's financial obligations have grown. However, interest expenses tell a different story. Despite an initial decrease of 19%, net interest expenses actually increased significantly by 552.6% due to a substantial rise in debt level rather than an actual increase in interest rates. This indicates that the company is paying more for its existing debts, likely due to higher interest rates or changes in its debt structure. Management's outlook on company strategy. The company's management is optimistic about its future prospects, citing unchanged guidance for 2025. They emphasize the importance of non-GAAP measures, like adjusted EBITDA, to evaluate performance and establish budgets. The company aims to continue growing its businesses through strategic and operational plans, capitalizing on the expected growth in demand for high-performance data centers in China and Southeast Asia. To achieve this goal, management plans to invest in new data center initiatives, build relationships with customers, and potentially make strategic acquisitions or investments. This multifaceted approach is designed to drive revenue growth and increase profitability over time. That concludes the financial summary for GDS-SW. Feel free to comment below, and I will be happy to answer them when possible.